Glantz Technologies owns and operates Glantz Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glantz Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glantz Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glantzpay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Bonds, notes, and interest rates. What's your take on those?
Well, from a bigger picture perspective, I continue to think we've got a multi-year topping process in bonds and notes, bottoming process in interest rates, which, that's no great revelation. That seems to be the general consensus. But, starting from the bigger cycles and longer-term outlook, going back to 2016, when I was expecting a major top in bonds, and that was, in addition to being many more immediate cycles and a lot of indicators pointing to that, it was also a strong convergence of three major cycles. A 40-year cycle from 1976 when interest rates bottomed and went into a parabolic 4 to 5 year move up. It was 70 years from the lowest interest rates in the last century in 1946, and it was 80 years, or two of the 40-year cycles, from 1936-37 when after rates had been eased after the stock market crash of the late 20s, early 30s, and all of the economic malaise that followed, all of a sudden in 36 was when rates were suddenly bumped up again. Stock market in the ensuing years went into another sharp sell-off. So you had these major multi-decade, multi-generational cycles all coming into play in 2016 and auguring a major top in bonds. But as I said leading into that, and I've tried to emphasize since then, a top of that magnitude takes quite a bit of time to trace out. It's not that you're going to have an immediate crash in bonds, but rather a couple years of this topping process before we get to the point where there's really more of a likelihood for a sharp and prolonged sell-off in bonds. And so within that, kind of taking it now down to the more immediate outlook, bonds and notes have had they've been one of the most consistent markets on a what I refer to as geometric cycle basis, and I'm not the one came up with that. It's derived from W.D. Gann's works, but just the idea that a year is also like a circle divided into roughly 360 degrees, and the major divisions of that at the 90-degree or 90-day or 3-month time frames are very significant turning points in certain markets, particularly on a intra-market basis. So bonds and notes have shown just a very strong proclivity, and there certainly are some fundamental reasons for this too, but even when those fundamentals aren't very strong or very altering to the trend, the technicals and the cycles continue to apply and adhere to these markets. And so you've had this sequence of turning points in December and June of of many years. Out of the last 20 years, there's been a consistent 3-year cycle, 1.5-year cycle, and even breaking all the way down into a 3-month and 6-month or 90 and 180-degree cycles where bonds just turn with a very consistent regularity on that cycle basis. And the last phase of that 90-degree cycle was in September when bonds and notes put in a top. And now we're coming into the convergence of several of these related cycles in December when another downturn has been expected in bonds and notes. But really my focus is out on June of next year and the synergistic combination of cycles pointing to June 2018. And I'm going in depth in that in my December Inside Track, but that is just a time frame that I think is going to have a strong impact on interest rates and on the bonds and notes markets.
We'll have more with Eric Hadik right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Crude oil has had a very good run going in late into the fall. Usually we start to see a decline in crude this time of year. Why is it that high? Is that part of a natural cycle?
It is certainly adhering to cycles, and much like last year, you also have at least one fundamental event or anticipation of that event spurring higher prices across the energy complex, and that's OPEC meeting and discussions of either further cuts or freezes. But ever since we saw those cycle lows that we've talked previously about in mid-year, and then September was when everything was looking like the entire energy complex should enter a more sustained bull market. And so it has certainly stuck to that outlook. But I am thinking that crude in particular could put in a multi-week, probably multi-month top in the first half of December. Heating oil and even unleaded gas could see their final highs stretch into January based on some related cycles, but they have certainly been, they led this rebound, turning up and giving some powerful buy signals in July and August of this year, and they also look like they could carry over a little bit farther, a little bit beyond what crude is on track to do. So I think that we still have some upside there, but we're getting closer to the time for an intermediate peak.
If oil stays in at that level, can people still invest in it, or is it a time to start getting out? Well, it would depend on your time horizon, because I do think that there is another leg up after a couple months of consolidation. So it would be more a case of waiting for a substantial pullback to enter, re-enter, or add onto positions in that market. But, it's very important to kind of specify what the time horizon is that's being invested in, and what the risk tolerance is. So I would say that it certainly will be a time to look for a pullback after we get a little bit more upside, but then in first quarter of 2018, there's the potential for a higher low and then another wave up from there.
We'll have more with Eric Hadik right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Eric Hadik. Eric, what's going on the precious metal front?
They have really been bogged down in a trading range for a few months here, but the thing that I keep focusing on and keep emphasizing is the underlying weakness that we've seen in the gold stocks and in indexes like the XAU and the HUI, that they were looking for new lows coming into November, December of this year. They have a pretty consistent 11 to 12 month cycle that since the February highs, I've been talking about this and why the gold stock indexes shouldn't set a multi-month and probably multi-quarter bottom until the end of this year. So we're now into that time frame, that November, December time frame. And one of the downside targets, the primary downside target that I've had for the last month and a half in the XAU is also now within striking distance, down around 77.5 to 78.5. But it's important to kind of emphasize there that that's primary downside target, but whether it ends up being the low for this move will be largely determined by how and when that level is tested.
Is gold a gold play, or is it a U.S. dollar play?
I think that gold has been kind of going to the beat of its own drummer, although I do think that if the dollar sees another leg down, as I'm expecting, a leg that could carry into the second quarter of next year, that I think that will be the time when the inverse correlation between the dollar and gold becomes a little more consistent, and as you're saying, it becomes a bit more of a dollar play. I have this axiom that I often repeat and try to emphasize, and the crux of it is that when you have markets just like that correlation you're talking about, up dollar, down gold, down dollar, up gold, an inverse correlation, that correlation is far more consistent and reliable when the lead market, so we'll say the dollar leading gold, when that lead market is more of in an extreme phase or an accelerated move. And that's when you see those types of correlations hold firm for a period of time. But when you're in more of a trading range and more of a normal controlled trend, there are so many other fundamentals impacting each individual market that to sit and try and trade off a strict correlation or inverse correlation usually leads to more frustration than anything. So from a general standpoint, I think we are going to see that that dollar play in gold, and I think that there's a specific 2 to 3 week period that I'm really looking at in the coming months for a lot of these related markets and correlated markets to enter more of an extreme phase and then see more of this pure dollar, maybe even interest rates in there, gold and foreign currencies moving in lockstep like traders often expect that they should do all the time, when in reality they're only moving like that a portion of the time.
CN Rail is warning that its fourth quarter will be challenging, and it seems to me usually transports are the trend indicator if the market's going to take a downturn. Is this a trend indicator about to happen?
Well, the transports are certainly giving some yellow flags or early warning signs. They gave a critical weekly trend signal for me back in mid-November, and what that signal almost always triggers is a 2 to 3 week bounce and then the onset of a second leg down. They had already seen a decent decline, and actually at the same time, or towards the end of that decline in the transports, you had a lot of your European indexes also take a bit of a hit, many of them shedding 5% or more in a couple weeks' time. So it was a case of a second kind of yellow flag going up for the overall equity markets. But there have been warning signs like that in the past that haven't gone all the way to fruition and triggered an all-out reversal signal. But the transports are right in that, they've rebounded for almost 2 weeks now, so we're kind of right in that key time frame between now, November 28th, and December 8th is kind of that time frame for a secondary high, and if they can set that without closing above their previous high and then start to give some reversal signals back down, that would be the time and the type of divergent signal that I'd look for to give some cautionary signs for the overall market, and that you could see at least a multi-week correction of 5 to 10%. And during that, often in the early stages of that, the market will tip its hand as to whether it's going to be anything more than that or not.
Mm-hmm. Now, of course, going into, with American Thanksgiving just over and then going into Christmas, those are busy periods for the airlines. Does that help their picture?
I don't get into the specific fundamentals of each of those markets. So whereas, and a lot of things like that are already factored into the market anyway. So if there's anything that's less than expected, it can certainly weigh on prices. And really coming through Thanksgiving, that's the biggest, or I guess that's more the biggest road travel, but I think air travel too of the year. So what specific impact that will have, I don't know and can't say. And like I said, I don't keep a close enough eye on those types of fundamentals to be able to comment intelligently on it.
Eric, anything else you wanted to add to today's show?
No, I think that's about it, Jim. I think we hit some good high points and probably a good place to wrap it up.
Eric, thank you so much for being on the show.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.